In this video, I'm going to share with you the exact entry criteria I use for my strategy that I coach on Fiverr that has so far earned me 184 straight 5-star reviews. Hey, it's Jan here, and in this video I'm going to show you a little bit more about my entry criteria. I'm going to show you exactly what I do to identify the opportunities and then how I time my entry on 3 different time frames. So I'm going to start off with this indicator you can see here. Now, this indicator is a momentum-based indicator. Now, I have to just make one thing very, very clear here. This indicator is by itself is pretty useless. Okay, it repaints. If you look back in the past, it will look different. It's pretty useless. Okay, it doesn't work all by itself. This indicator plays one very specific role, and that is to identify the perfect market conditions for our trading strategy. Okay, so I trade turning points. I want to know when the market is likely going to reverse in the opposite direction, and this indicator helps me to tell me that the market conditions I'm looking for, that increases the probability for the markets to reverse in the opposite direction, have been met. That's the only role. And once I get an alert to tell me that this momentum exhaustion is at above the 6 or at the -6 area, then you forget about that indicator. Now it's time to focus on the charts. Okay. So the other thing you need to know about this indicator is just because it's at the +6 area or the -6 area, it doesn't mean that the market is going to reverse in the opposite direction. It just means it's exhausted. So when it's exhausted, then one of two things can happen. It may just pull back a little bit because it's exhausted, and then potentially range to the side and then push up and into new highs, which will cause this indicator to go back up as well. Or the other thing it can do is it can completely reverse. Now, obviously, we want to know if it's going to reverse. So what you do the moment you get this alert is you want to look at price action. The confirmation will be in price action itself. So once I'm in the zone, say for example, I'm at the -6 area, I want to see in price action itself that it's going to reverse in the opposite direction. So if I just quickly show you what I mean over here, if you look here, and you even look at this point over here as well, here we are also at the -6 area. But then it dropped even further for the next 2 candles before it started to reverse. So the indicator is not good enough, as I just said. What you want to see is you want to see an engulfing candle either right on the peak of this exhaustion indicator or the very next candle. So you want to see an engulfing. When I say engulfing, I mean specifically just the body of the candle. So the body of the candle needs to take out the previous candle's body, obviously in the opposite direction, right? So if you think about this, like if there's no more momentum in a specific direction, then what you want to see is you want to see new momentum coming into the market in the opposite direction. That is your confirmation that the probability is high that it's going to reverse from that point. Okay, so this is your actual trigger, the candle itself. It is the ultimate indicator you can ever hope for. So, but engulfing candles by itself is pretty useless. I mean, I've already told you this indicator by itself is pretty useless. But if they work together, that's when it really starts to mean something. They need each other. The price action and that indicator, they really need each other. So let me show you a couple more examples just on the 1-hour time frame itself, and then I'll just slowly build on that. See, here's a really nice one as well. So if I look at this one, there's your pullback. And now this indicator tells you that the momentum in this particular direction is now getting exhausted. So while you're in this exhausted state, you want to see new momentum coming in the opposite direction. And that will always be the engulfing candle. It will always engulf the previous candle. You want to see price action itself pushing into the opposite direction. That's your first clue that new momentum is coming in the opposite direction. So this is your confirmation. So your entry is going to be on the new candle. So once this candle closes, you'll get the confirmation that you found your trigger and your entry will be on the new candle. Where's your stop loss? Your stop loss is always at the lowest point before it reversed. So in this case, it will be the lowest point just below the engulfing candle, right here. That would be your stop loss. Your entry is obviously when this candle closes, so you're going to enter on the new candle. Now, you have to always wait for the candle to close. Do not get in if you see that there's about 5 minutes left and the candle's engulfing the previous one. Don't get in because that candle can reverse in the last few minutes. So wait for the candle to close and then you enter on the new candle. Really important. Okay, so your entry is going to be on that crosshair over here. How do you take profit? Well, we'll get to all of that stuff in this course. There's another example I want to show you. There's actually two examples right next to each other. And I do like to use two examples next to each other because it just makes the explaining a little bit better or easier. So if I zoom in here, here they are. Okay, so here is one opportunity right there, and here's one opportunity over there. So if you look at these two, right, now they both have engulfing candles, but this one, you can see that you are getting the engulfing candle or the body that engulfs the previous candle's body right on the peak of the exhaustion. And on this example over here, you're getting the engulfing candle on the first candle after the peak. The first candle after the peak. Right, so how do you know if you're getting it on the peak? Well, in real time, it will just be a case of it's still above the -6, so the line is still pointing upwards before it comes back down. That will typically be the peak. If you get the engulfing right while that red line is still above the 6. Okay, and then the other one will typically be, if I just show you the other one, see now it's at +6. Still at +6. You see the red line is still pointing to the upside, but then the next candle, you see now it comes back. The line snaps back snaps back down, and this is the first this is the first bearish candle and the engulfing candle, the trigger candle. So this is the first candle after the peak. Those are the only two times when your entry criteria is valid. Okay, it has to happen either right on the peak of the exhaustion or the very next candle, like over here. Okay, anything after that, like if you get it on the second candle or the third candle, it's too late. Right, it's too late because you want to be in the zone. You want to be in the sweet spot when you get the confirmation that price is going to reverse, that engulfing candle. You got to be in the zone. So that's why it's either going to be right on the peak or the very next candle. Right. So what I would like to add to that now is I've just shown you like the engulfing candle on the 1 hour time frame. But the other thing you can do is the moment you get the exhaustion alert, you don't actually have to wait for your engulfing candle on the 1 hour time frame. What you can do is you can actually go down 2 time frames. 2 time frames, right? So if you get the alert on the 1 hour time frame, then you can go down to the 15-minute time frame and see if you can find your entry over there. Now the entry criteria on the smaller time frames is identical. You also want to see an exhaustion and you want to see the engulfing. So the moment you get this alert, if you go back to the 15-minute time frame, you want to find the exact same criteria. So it's going to be exhaustion levels, and then there's your first bullish candle. Does this one engulf that one? No, right? Definitely not. This is not engulfing that body. So when this candle closes and your entry criteria has not been met, then you go up 1 time frame to the half-an-hour time frame. So now you're going to go up 1 time frame, and you want to see if you can find the engulfing over here. And here you do find the engulfing, right? That's the peak, and there's the engulfing, right on the peak of the exhaustion. So this is a valid entry. Your entry in this example has been met on the half-an-hour time frame. So right on that crosshair. And where's your stop loss? Your stop loss is always below the lowest point before it reversed. Okay, so because if this is your trigger that it's going to reverse, the engulfing candle, like right on the peak or the next candle, if that's your trigger that is going to reverse, then the lowest point before it started to reverse is the point where you're wrong. So your stop loss is going to be just below this lowest point. One of the indicators that you also have is the spread indicator. So the lowest point, I like to add just the spread and also just another pip, just a little bit of clearance. So you're not right at the lowest point, because sometimes what can happen is the new candle, like once you've met or found your entry criteria, it can actually go down and come quite close to the lowest point and then just kick you out. Even though you have not, or the new candle did not break this low. It just came pretty close, but because of the spread, you get kicked out and you lose the trade. So just add that little bit of extra, okay? But the entry criteria is, I think, that's pretty straightforward. You always wait first for the conditions of the market, and then you want to look for the price action to confirm that it's not necessarily 100%, but the probability is quite high, at least, for it to reverse in the opposite direction. By the way, if you do not find the entry criteria on either the 15, because obviously you're going to start with the 15-minute time frame, and we did not get something on the 15, then we went to the half an hour, and that's where we found it. Now, if you didn't get the engulfing on the half an hour, that's when you'll go over to the 1 hour time frame. That's the last time frame you'll end at. Right? So if you don't, you immediately go to the 15. Don't wait for the candle to close on the 1 hour. This indicator is quite dynamic. It will happen in real time. It's not going to wait for the candle to close before you get the alert. You'll get it in real time. So on the 1 hour time frame, that's where you want to get the signal. And then once you get that signal, you then immediately go to the 15-minute time frame. You want to wait for the same conditions. You want to wait for the exhaustion and the engulfing. And when you get that, that's when you will enter the trade. But if you don't get it on the 15, you go to the half an hour. If you don't get it on the half an hour, then that's when you finally go to the 1 hour. And if you don't get it on the 1 hour either, so there's nothing on all three time frames, no entry. The entry criteria has not been met, so you're not going to take the trade. Right, so that is the entry criteria. That's how you're going to identify opportunities. You just wait for the market conditions on the 1 hour time frame, and then from there, you're going to find your entry. Now, there's a lot more to the strategy than just the entry criteria. There are different structures as well. So you are going to get counter trend signals, you'll get trend following signals, and you also get signals in a range. They're not the same, so you can't handle them the same. The process is identical up to a certain point. So the identifying of opportunities is you always wait for the market conditions, but then from there, based on the structure, the rules split into different directions. You're not going to have the same rules for the different structures because they're not the same. A trending market is not the same as a ranging market, so you can't have the same approach. You need to have a different approach. So, and that is going to be our next session. The next session, I'm going to go into structures, and I'm going to show you exactly what I do to identify the three different structures, specifically for this strategy. You may have your own ideas of how to identify them. You'll see like exactly what I do to identify those three structures. It's very clear. In fact, it is as clear as the entry criteria. There's no guesswork with this strategy. It's very clear. Engulfing candle is an engulfing candle, right? You're not going to, it's going to be very difficult to mess that up. So the rest of the strategy is as clear. There's not going to be any guesswork. And that counts for not just the identifying of opportunities, the identifying of the different structures, but also how to take profit in the three different structures. It's all very, very clear. All right, so that's it for this session. I'll see you in the next one. If you would like to learn the rest of the strategy, you can go to Fiverr, search for my name, JCAN007, or if you just type in this headline as is in Forex day trading strategy, you should see my gig, and you can purchase the gig from there. There's two options. You can either ask for the other three videos, or you can ask to get the rest of the training one-on-one. So we can schedule a time on Zoom, and I can take you through the rest of the strategy on a Zoom session one-on-one.